Today, the Federal Reserve announcing it will scale back its economic stimulus even faster. It's amid concerns of persistent inflation. We have analysis. And the U.S. getting another battery plant, this time from electric bus maker Proterra. Will the United States catch up to China in the electric vehicle race? That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. Amid a bout of historically high inflation, not just in America, but around the world, the Federal Reserve announced today it will scale back its economic stimulus even faster than planned. The Fed today confirming expectations it will print less new money each month to prop up financial assets. This reduction in asset purchases, also known as tapering, the Fed says it will double its pace of tapering.
We are phasing out our purchases more rapidly because with elevated inflation pressures and a rapidly strengthening labor market, the economy no longer needs increasing amounts of policy support.
Along with broken supply chains, many have put much of the blame for rising prices at the Fed's door, saying its loose monetary policy is inflationary. Until recently, the Fed insisted inflation would be transitory and would ease as supply chains recovered. However, it retired that label a few weeks back as it began to scale back its economic stimulus. It also looks like the Fed will begin raising interest rates sooner and faster than expected. Cheap credit has also been blamed for pushing prices higher. So joining us is Danielle DiMartino Booth, former Federal Reserve insider, author of Fed Up, and also the CEO of Quill Intelligence. Danielle, great to see you. Thanks for coming on.
Thanks for having me on this Fed Day.
Danielle, to fight inflation, the Fed's going to double its pace of tapering. It wasn't long ago, a couple of weeks, 3 weeks ago, the Fed was sure, all but sure, give them credit, that inflation was going to be transitory. What's changed between now and then?
Well, I think a lot of what's changed between now and then is the pressure points. I think the public narrative has changed. I think inflation is more important right now to many Americans than the fact that the unemployment rate is at 4.2%. Also, one of the lowest on record in the last half century. So I think that the Fed is having to shift with the political winds right now, and we are heading into a 2022 midterm election year, and I think that the pressure's building to try and get some of these price pressures off of the constituents.
We saw the stock markets deep in the red all day, and after the chairman was speaking, it seemed to rally. We're well in positive territory now. What's happening there, and what do you expect to happen there?
So what's happening on a very technical level is that the yield curve is continuing to flatten. And so the differential between short rates at, say, the 2-year Treasury and the 10-year Treasury, those differing maturities, the differential has continued to come down. And when the spread between those two yields decreases, that tends to indicate that the economy is going to be slowing. And if the economy is slowing in reaction to the Fed being much tighter than they had anticipated, there were several dots on that dot plot. There were 2 members of the committee that actually were advocating for 4 rate hikes in 2022. The majority see the Fed raising rates 3 times in 2022. This is a huge shift from the September meeting, and what the yield curve is telling us right now is that the Fed's not going to be able to tighten. And that's why I think the stock market is celebrating right now, because it seems like the economy slowing is going to get out in front of the Fed's ability to tighten and maybe force them to stay in the market and stay more dovish and keep monetary policy easier than they would otherwise.
So what are the forces at play here? We had the Federal Reserve insisting that they're going to tighten faster, it sounds like today, as you mentioned, but you're saying there are other forces at play, other signs that are showing maybe recessionary risks or some risk of a slowdown?
Well, we have seen, we've seen mortgage originations decline for 3 months in a row now. We had a retail sales figure out for November that showed that the core retail sales, so to speak, that which feeds into the gross domestic product GDP calculation, when you take out autos and food and building materials, that actually printed in the negative in this morning's data. So there are definitely some initial signs that the economy is slowing, and part of why the economy is slowing is because inflation is running as high as it is. So there's a little bit of circularity there. The cure for high prices is high prices. That appears to be the case if it is indeed slowing the economy, and that's going to force the Fed again to be more measured than it would otherwise like to be, given what we saw in terms of the hawkishness come out of the Fed today.
Very good. A lot to unpack. Danielle DiMartino Booth, Quill Intelligence. Appreciate it. Thank you.
Thank you. Happy holidays.
And overall, the U.S. retail sales grew modestly in November, up 0.3%. It is still less than economists predicted, though. It's also much slower than October. Analysts say October number could have been boosted by early Black Friday deals. The biggest weak spots in November's retail sales report were department stores, electronics stores, and appliance stores. They were down around 5%. One bright spot was spending at bars and restaurants, up 1%. That's the fastest pace of growth since July, hinting at a return to pre-pandemic behavior maybe. Overall, retail sales were still 16% higher than November 2020. And some retailers are planning to open online marketplaces like Amazon or Etsy, where others can sell their products. Macy's is the latest to announce an upcoming launch. Here's NTD's Evelyn Lee with more details.
Retailers like Urban Outfitters and Express are jumping on the marketplace bandwagon. And Macy's is the latest company to do so. It plans to open an online marketplace that allows third-party sellers. Spencer Ware is a managing director at Riveron and CEO of BH Cosmetics. He says the timing now makes sense.
Retail has been under attack for a long time. And I think it's under only greater attack now. Supply chains are under attack, margins under attack, factories under attack, sourcing's under attack. It's all challenged. It's all under attack, and they just need to lower risk to live to another day.
Economically, this is a low-cost and high-margin opportunity for the companies. Little investment is needed, and they don't need to buy or hold inventory. But there is a risk for the brand, especially if the third-party seller is bad.
People will shop at Macy's and J. Crew. We don't necessarily need to go to the mall anymore. We just go online. And we can pick an item from here, an item from there, and it's much easier. So the loyalty is falling away.
Some big retailers are trying to expand. Kroger, for instance, introduced a marketplace and is selling goods from Bed Bath & Beyond now. Urban Outfitters added second-hand clothing to its portfolio this way. And for small businesses, this is an opportunity.
It can give a small brand the opportunity to partner with a giant and be seen on a much larger stage. It can also give you the opportunity to get out way over your skis.
Newer marketplaces reportedly are trying to avoid risk by being more selective with sellers. And Ware says small businesses need to be careful what they sign up for, because committing to agreements that don't go well can be destructive. Evelyn Lee, NTD News.
And luxury fashion brand Hugo Boss wants the wool used in its clothes to be cultivated more humanely. It plans to phase out the use of mulesed wool. Mulesing is a painful procedure carried out on lambs where large strips of skin are cut from them to protect them from flies. But it's often done without anesthesia. For its pure wool suits, the luxury brand is planning on becoming completely mulesing-free by 2025. And the entire product range will be mulesing-free by 2030. A total of 35 brands like Adidas and Calvin Klein have already committed to purchasing only certified mulesing-free wool. And according to one advocate group, Hugo Boss has been one of the most active supporters of the cause. Four Paws wants to mobilize enough brands to encourage the wool industry to end mulesing entirely. And Wall Street ended sharply higher today, despite the Federal Reserve announcement about faster tapering. The Dow rose 383 points, about 1.1%. S&P 500 gained 76 points, about 1.6%. And the Nasdaq gained 328 points, about 2.2% today. And some cryptocurrency ads are getting banned in the United Kingdom. It's for not disclosing the risks involved with the type of investments. Authorities say some companies were also taking advantage of consumers who have no experience with crypto. The watchdog banned 7 ads, including on websites, Twitter posts, even posters in public transportation. Companies impacted by the ban include big exchanges like Coinbase Europe and eToro. One ad that stands out is from Papa John's Pizza. It was giving away free Bitcoin with every qualifying pizza purchase. Papa John's said it was celebrating Bitcoin Pizza Day, which is meant to commemorate the day when 2 Papa John pizzas were bought for 10,000 Bitcoins. That was over a decade ago. Those 10,000 Bitcoins today, they're worth about $500 million. UK Watchdog said the pizza ad failed to warn customers about the volatility and risks that come with crypto. And Honda's Research Institute has invented a system that uses its vehicles to monitor road conditions. That includes lane lines on roads that can fade over time. That makes them hard to see, of course. The system uses the car's onboard cameras and GPS to inspect and grade lane markings, then sends the information to road operators in real time. There are only 2 vehicles currently in the program, but Honda says it could lead to safer roads in the future. But the car maker hasn't announced plans to commercialize the technology. Another electric vehicle battery plant will be built in the United States, this time by U.S. bus maker Proterra. So with all the chip and battery plants in the works, how will the United States fare in the global EV race? NTD's Faye Corder speaks to an expert.
California-based Proterra is building an EV battery plant in South Carolina. It's going to invest at least $76 million and expects to create over 200 jobs.
Proterra is a domestic, U.S.-based bus manufacturer, and it's been growing rapidly.
David Hart is a senior fellow at the Information Technology and Innovation Foundation. Hart says even though the U.S. is investing heavily into electric vehicles, it's not in the lead.
The U.S. is still lagging behind, certainly in adoption, but it's starting to trend up. And in production as well, I think that will follow adoption. And we see automakers making large commitments in the United States as well as elsewhere. But the overall picture, the vast amount of capital is still flowing to other countries besides the U.S.
While North America has announced 46 gigawatt hours of lithium-ion battery cell production capacity for next year, China has announced capacity of 373 gigawatt hours. Gigawatt hours are used to measure large amounts of energy output.
I don't know that the U.S. will catch up, but I do think it will hold its own. The auto market is going to be regional, that is continental, so the North American market will be different from the European market, which will be different from the Asian market, because these vehicles are very large, and the batteries as well, very hard to transport.
Proterra's planned facility will be its 3rd battery production plant in the country. It hopes to begin production in the second half of 2022. Faye Corder, NTD News.
And the U.S. Senate today voted to pass the National Defense Authorization Act, or NDAA. It authorizes $770 billion in defense spending. Now the president is expected to sign it into law. The bill got strong support from both Democrats and Republicans. It's also closely watched by a broad swath of industry and other interests, partly because it's one of the only major pieces of legislation that becomes law every year. It includes a 2.7% pay increase for troops, more aircraft and Navy ship purchases. That's in addition to strategies for dealing with geopolitical threats, especially Russia and China. The bill sets aside $7 billion for a special fund to strengthen U.S. forces in the Indo-Pacific region. It'll also ban the Department of Defense from buying products produced with forced labor from China's Xinjiang region. And the House passed another piece of legislation Tuesday to ban all imports from China's Xinjiang region. It's seen as Washington's continued pushback against the Chinese regime's treatment of the Uyghur Muslim minority. The Senate is expected to pass the version of the bill as soon as today, and President Biden again is expected to sign it. Here's the White House press secretary from yesterday.
We have been clear that we share Congress's view that action must be taken to hold the PRC accountable for its human rights abuses and to address forced labor in Xinjiang. We've already taken action on the global stage in that regard, leading an effort that G7, putting in place financial sanctions and global Magnitsky visa restrictions, and I think that's evidence of our commitment to this.
The White House says the administration will work closely with Congress to implement the bill to ensure global supply chains are free of forced labor. The Chinese regime denies abuses in Xinjiang, which supplies much of the world's materials for solar panels. But the U.S. government and many rights groups say Beijing is carrying out genocide there. And shares of China's biotech firms plunged today amid concerns the Biden administration will put an investment and an export ban on more Chinese companies. NTD's Olin Richards has the details.
Shares of Chinese healthcare and technology firms tumbled on Wednesday. The decline was led by WuXi Biologics, which crashed near 20%, while Sino Biopharmaceutical dropped 5%. The decline came after a Tuesday report from the Financial Times. It said the U.S. Treasury Department would add 24 Chinese companies to a trade blacklist known as the Entity List. This list might include the largest Chinese commercial drone maker DJI and biotech firms for their involvement in Beijing's mass surveillance of Uyghurs in Xinjiang. China affairs analyst Frank Chin says he thinks Chinese companies listed on Wall Street will likely be unlisted from U.S. capital markets in the next few years.
It will inevitably happen. In reality, it's already started. Many companies are purposely avoiding going public on the American stock market. The Chinese government is forcing them to delist from the American stock exchanges and return to mainland China or go public in Hong Kong.
Take Chinese ride-hailing giant Didi, for example. It said it will start delisting from the New York Stock Exchange and plans to list in Hong Kong instead. That decision made just less than 6 months after it went public.
Honestly, it's not because the companies themselves are opposed to it. It's actually because of the Chinese regime using national security as an excuse to stop American auditors from inspecting their financial statements.
This month, the U.S. Securities and Exchange Commission finalized rules allowing it to remove foreign firms from U.S. exchanges if they failed to comply with U.S. audits for 3 consecutive years. Arlene Richards, NTD News.
With that, we're going to take a quick break, but still to come. The company that makes cream cheese is offering to pay you to buy something else this holiday season. Why? And Amazon is releasing a short documentary about William Shatner's ride to space to show us what happened on that journey. That and more coming up on NTD Business.
Secure, the true solution for your digital privacy and security. Secure is a private and secure messaging and email solution hosted in Switzerland, using military-grade encryption and Swiss privacy laws, giving you true privacy. Secure is 100% private and does not collect or sell any of your personal data. Secure's Helix technology connects you securely to our Swiss servers without the need of a VPN, guaranteeing privacy and security for all your communications. Secure Messenger doesn't require your phone number or any personal data that hackers target. Chat by Invites allows you to chat privately and securely with anyone outside of your secure network without the need for others to download Secure. Secure Send offers you a private and secure way to email anyone outside of Secure. You won't find this level of privacy or security on any other email or instant messaging application. Visit secure.com. Regain and protect your privacy today.
You are not just watching a performance. You are witnessing a culture reborn. Now, you'll see what the modern world has never seen. China, before communism. Shen Yun 2021, live on stage. Get tickets now at shenyun.com.
Someone has to find a way to build the Great Dome. Completely new, completely original.
Welcome back. Are you planning on making cheesecake for the holidays? Well, Kraft, the company behind Philadelphia cream cheese, will pay you to make a different dessert instead. It's because there's a cream cheese shortage. Kraft said today it plans to pay $20 to 18,000 shoppers is to buy other ingredients for dessert. You can sign up for the offer starting Friday and then send a receipt for a different purchase between Friday and Christmas Eve for reimbursement. Cream cheese is key for desserts such as cheesecake and toppings like icing. Supply chain disruptions have caused cream cheese prices to rise, impacting individuals and businesses across the country. And if you're a chef or restaurateur looking to set up shop in your own space, Las Vegas could be the perfect location. A Nevada real estate developer is offering to give away a diner, deli, or coffee shop in downtown Las Vegas for free. The developer Dapper Companies is holding a contest to decide who the lucky entrepreneur will be. To enter, you must create a presentation describing your concept in detail. Then qualified applicants will present their ideas and businesses to a panel of judges who will pick 5 finalists. The finalists will then cook selections from their proposed menus. Judges from multiple Las Vegas eateries and restaurants will pick the winner, and after that, the winner will work with the developer to build out the property. And a baker in a German state of Bavaria is offering up a new type of pastry. They look sweet, but also contain an unexpected burst of flavor, thanks to a unique ingredient. Take a look.
Fresh and brightly colored, these sweet pastries are sure to whet the appetite of anyone who sees them, but they contain a unique secret ingredient: algae. A German baker has won over customers with this eco-friendly innovation.
Of course, in Bavaria at first, everyone was like, "What's that? I don't like fish." And it wasn't working. But then bit by bit, we started posting on social media. Then people started trying it and they realized it's tasty.
The algae treats not only stand out on the shelves, but shine under UV light. But their maker, also a skilled chocolate confectioner, had made a name for himself long before dishing out the seaworthy snack. The pastry chef used to create baguettes featuring national colors for the European Football Championships, but has since taken a new approach to baking. He invented this new dessert along with a professor at the University of Munich. The scientist helps extract necessary ingredients generated from algae. He explains that the algae can be farmed in either salt or brackish water.
Algae has a photosynthetic efficiency which is about 3 to 4 times higher than any land plant, so they grow 10 times faster and actively consume CO2. So we can benefit the climate by eating algae products.
The concept of eating the plant isn't a modern one. Even the Aztecs grew and ate algae.
Something with bread and algae already existed, but nothing to do with sweets or with snacks, so we tried to combine creativity and health to create it.
And so far, it appears to be a smashing success.
And Amazon wasn't around to chronicle when William Shatner boldly went where no man has gone before. But it's here now to show us what happened when he went where only a select few have gone. The company's streaming service is releasing a short documentary about Shatner's ride to space aboard Amazon founder Jeff Bezos' Blue Origin earlier this year. In less than an hour, Shatner in Space tells the story of the man who portrayed Captain Kirk in Star Trek, preparing for his real-life space flight and then embarking on it. It includes conversations he had with Bezos leading up to it, the 90-year-old telling his kids about what he was going to do before showing what happened on the flight. Shatner was visibly moved by his journey as he shed tears and repeated, "Oh wow," while floating weightless and looking out the window. Cynics saw the journey as a public relations move, while others viewed the life-imitating art moment as inspirational. And NASA's James Webb Space Telescope is going to be launched next week. The telescope was finished years late, cost far more than planned, but NASA hopes the instrument may expand our understanding of the universe, including its earliest stages. NTD's Olin Richards takes a look.
The goals of the mission include searching for the first galaxies or luminous objects formed in the early phases of the universe, and learning how galaxies evolved from their initial birth to the present day. NASA says Webb is going to push beyond what the Hubble telescope was able to do.
It's going to be sensitive to galaxies that are more distant and younger, that really formed closer to the start of the universe. So in that way, we're going to see towards the beginning of the universe closer than ever before with Webb.
The Webb telescope is designed to be about 100 times more sensitive than the Hubble telescope. It's due to blast off on December 22nd on a rocket from French Guiana in South America.
After completing mid-course corrections, the Webb telescope passes the orbit of the moon. The mid-booms extend and the sun's shield assumes its hexagonal tennis court-sized shape. Discoveries made by this observatory will rewrite textbooks, inspiring the next generation of future engineers and scientists. This revolutionary tool will provide mankind with an unprecedented view into the birth of the first stars and galaxies.
The telescope cost $8.8 billion to develop. The total price tag, including operational expenses, is almost $10 billion. Other than studying the early phases of the universe, scientists plan to use the telescope to study exoplanets, which are planets beyond our solar system.
When we look at a blank part of sky and see distant galaxies that we didn't realize were there before, or we look at the atmosphere of an exoplanet and we discover a molecule that we didn't appreciate would be there before, and we have to figure out, okay, what does that mean now? And what does that mean for our understanding of how the universe works?
After launch, the Webb telescope will deploy on a month-long million-mile journey to a more distant orbit than Hubble, beyond the moon.
That's the latest business updates for today, but you can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern. For NTD Business, it's all for today. Thank you for watching. We'll see you tomorrow.